Good afternoon, everyone. I welcome you all. I'm C. Ankit Sharma, your income tax faculty for today's session. So, I believe that you must be studying very hard to achieve the goal of your life, that is to be a chartered accountant as soon as possible. So, I welcome you all again. Good afternoon, namaskar, sat sri akal, vanakkam, etc. etc. So, today we will be discussing the last chapter or unit of our income tax subject. And you can say this is the final summary of every topic what we have already gone through in this subject. Like from basic concept, residential status, then heads of income, then clubbing provisions, setting of provision, deductions, and after that, the final calculation of your income and the tax liability will be discussed in this chapter. So there is not much new topics in this unit number 9 because the new topics are AMT in this chapter and optimization of your salary structure. All other topics already we have gone through, whether it's regarding the basic concept or residential status, etc., etc. So I have also asked you all that please revise the provisions of basic concept, rate of taxes provisions, surcharge, rebates, integration of agricultural income, and specifically PGBP provision. Because the compulsory question, which I believe going to be asked in your examination, will be from this chapter only, and it will consist a large part from the PGBP and other parts like deduction, house property, and capital gain, and clubbing provisions also, and rates of taxes, or could be residential status could also be a part of this long question. So PGBP or salary base would be the main part of this question, but all other chapters going to be also included. Even the TDS provision could be a part of this question, which is going to be asked in your examination. So that's why I have asked you to please revise those provisions, the basic concept topic, and specifically the PGBP topic. Other topics like deduction, etc., also having a role in this kind of question, which is going to be asked in examination. But I believe that you must have all gone through with those topics I have asked you to do. So I will discuss the provision of this chapter after thought for the day. As usual, we always discuss a thought for the day. And today's thought for the day is in front of you. And it says, when life puts you in tough situations, don't say, why me? Say, try me. So life would not going to be nice to everyone. Maybe this is not true that nature is going to be good for everyone. There would be problems, there would be situations against you, there would be a lot of trouble or a lot of things which you have to fight. But whenever there are situations like this, you have to be confident and you have to say, try me. Because even if you are not willing to come out of that, you cannot help it. So anything comes in front of you as against you, you have to fight it because you don't have any other choices. So better to say by me, it always say try me, and of course you will get out of it if you do certain kind of sacrifices, hard work, etc. Definitely you will come out of this. Okay, so that was the thought for the day for all of you. Okay, so good afternoon, Nitin. Good afternoon, Sania, Kasak, Pallavi, Anshika, Nanda, Anshika, Neeru, B. Saikidan, Pranav, Hardik, Ragini, Nancy, Manvi, Anshika. Anshika is saying that chapter 9 PDF is not showing in English language. I have downloaded it from the portal in English language. How it is possible? You might be going or you might be downloading from somewhere else. Kindly, if there's any issue, kindly mail to the BOS. Sir, I need one clarification. Can you please help with it, sir? Like if 80G qualifying limit deduction and 80 double G both deduction is given in the question, then sir, how to solve it? Like sir, we have to like make cases and on the basis of it, the most beneficial we have to give it to SSC. It's a very complicated question in my opinion. Yes, you are absolutely correct, Hardik. If there is deduction in section 80G, so all of you, if there is a deduction in section 80G and that is from category C or D, like first category is 100% deduction allowed without any qualifying limit. Second part is 50% deduction allowed without any qualifying limit. And third and fourth part is subject to maximum qualification limit. So to find out that qualifying limit, we have to calculate the GTI and adjusted GTI, etc. For that GTI purpose, we have to deduct all other deduction except 80G. You must have gone through with the provisions of this 80G and double G in the deduction topic. And in the same way, when we calculate 80G, that is for rent payment. So in that case also, they ask to calculate a certain percentage of your adjusted GTI. And in that case, again, it has been written that you have to reduce all other deduction except 80G. So if in a question 80G and double G both is there in a single question, then how we will solve it? Because when we will go to find out the adjusted total income for 80G, it will say reduce all deduction except 80G. And suppose in that question 80G is also there. So when you are going to find out the adjusted total income for 80G, it will also say first go and reduce 80G and all the reduction, then come to me. And if you'll go to 80G, it will say first go and reduce all deduction and 80G, then come to me. So that would be a problem. In that case, we have to find it out by equation methods. Like we have to assume one deduction is X and Y kind of series. So only with the help of that kind of equations, you are able to find out the value of X, etc. And only in that situation you are able to solve that question. And let me tell you, Hardik, that would be a very difficult and complicated solution, because in that case you have to kept in your mind the provisions of your mathematics algebra. That is, the minus sign is outside the bracket, you have to convert the sign also. So that would be a very complicated question. That's why it has never been asked in the examination also. Because if that kind of question has been asked, so the solution, even the normal question solution would be very, very difficult. So in that case, the answer is that yes, if that is the case, you have to assume one deduction like X, and then you have to forward that question. So if you want to see that how it can be solved, so I will definitely going to upload a question with solution for that. But it's my point of view that that kind of question is not going to be asked in the examination due to the complicated calculation which might you have to do in the examination, and that would not be easy in any circumstances. Fine. So if you want, I definitely going to upload a question and a solution regarding it. Okay. So Ambeshwari, good afternoon. Vishmita, good afternoon. Good afternoon. Vaidehi, Anshika, Malu. Anshika, if you have checked twice, kindly mail to the board of study. Definitely they will tell you from where to download the material. Okay. Nitin Prajapati, okay, good afternoon. Yes, I will upload a question for practice with solution, of course. So you can, if you want to practice, you can see how these kind of questions could be solved. Okay. So let's get started with the today's chapter, that is calculation of tax liability and optimization. Clear? Before solving this kind of question, kindly kept in your mind following things. I was writing those things before starting of today's class. So for solution of chapter number 9 question, or we can say the calculation of income tax liability, computation and optimization chapter, which we are studying, the first and the very necessary or essential point, the first step you should do, you need to see that what is the requirement of question. First of all, whenever you see a question in front of you for calculation, or you are seeing that a compulsory question is there, so first of all, you have to see what is the requirement of question. Please do not start the solution before seeing the requirement of question. So in certain question, they might be asking you just to calculate the total income. So you need not to calculate tax at all. Even if you know how to calculate tax in that question, do not do that. Okay. So total income also, they could be asked that you need to find out the total income as per section 115 BAC, or as per section option, that is optional scheme, shifting out of section 115 BAC. Or even they could ask that kindly calculate the total income most beneficial manner. So if there is a sentence, if there is a question which is there, or which is the requirement is this, that kindly find out the most beneficial total income, of course we have to solve it from both method to find out which is most beneficial to an assessee. Next, to find out section 115 BAC exemption and deduction. So we all know there are some exemption and deductions which are only available if you are opting for section 115 BAC, that means default tax regime. Whether it's a salary provision, whether it's income from house property because losses has been restricted, whether it's capital gain provisions. So there are certain exemption, deduction, restriction if you are going through with section 115 BAC solution. And that need to be kept in mind when you are solving these questions. Like section 35 deduction not allowed under PGBP if you opt for section 115 BAC, that is scientific research deduction. Not even section 35 AD deduction is allowed, not section 10 AA allowed. So please kept in mind that when you are solving a question as per section 115 BAC, so certain kind of exemption deduction like in salary head HRA exemption not allowed, etc. So please, even in clubbing provision, the exemption under section 1032, I guess, that is for 1500 rupees for each child is not allowed if you opting for section 115 BAC. So please kept in mind that when you are solving a question under section 115 BAC, those exemption, deduction and restriction should be in your mind. So please make short note for those exemption deduction, that should be topic wise. So when you are about to solve a question in the examination, so you can recall those short notes that I am solving a question of salary topic, I am solving a question of house property or PGBP or deduction. And if I'm solving it as per section 115 BAC, so certain these kind of deductions or exemption not going to be allowed. So that would be only possible if you are able to make short notes regarding it, and that short note should be topic wise, separately for salary, separate for capital gain, separate for PGBP, separate for deduction, separate for clubbing, separate for house property, etc. So it's a very important thing. Please do this thing. Okay. Next, the tax calculation structure. So in most of the cases I have seen, when a question is there and the requirement of calculation of tax has been asked, then in certain case we apply just tax and might be cess. So some students forget about the rebate applicability may be there, or there may be surcharge applicability. So whenever you are solving question for your practice, always make this your habit that first of all I will calculate tax, then I will reduce rebate, whether applicable or not. I will write it down this, and if it is not applicable, I will write it down not applicable. Please add surcharge also, whether applicable or not. If it's not applicable, write down not applicable. And then our cess 4%. Make it your habit. Even if you are seeing that rebate is not applicable because income is exceeding a certain limit. So do not skip that topic because that would be a practice for you, and in the examination, if rebate is applicable, you might not able to recall and you will solve the question without giving the benefit of rebate. In the same case of surcharge also, you should know that when surcharge is applicable, with which rate. So if you will make this as a habit that in every question I have to solve a question in this format. I have to calculate the rate as per slab rate or person wise rate, whether special rate of category of date, etc. Then I will reduce and I will write it down rebate, reduction, then surcharge and cess. So what will happen when you solve a question in this particular format? Whenever you write it down rebate, you automatically going to recall the provisions that rebate is applicable or not. Clear? So when I will solve question for you in test your knowledge questions, I would not follow this format, but for your practice, please follow this format always. That will reduce your mistakes. And when you know the provisions of rebate, and suppose you forget it to apply in examination, and when you're coming back from the examination, and then if you will recall, oh God, I did not reduce the rebate, even when I know the specific provision. Oh God, I did not apply the surcharge provision, even when I know the provision. So that would going to hurt you a lot. So please make a practice that whenever I will calculate tax, I will use this format to calculate tax. Clear? Again, total income and tax liability need to be round off in the multiple of 10 rupees. Please make this is also your habit. And whenever you are solving question for your practice from your MTP, RTP, or your study material questions, or your illustration or past year question, always give your answer of total income and tax in 10 multiple of 10 rupees. Clear? Then one more interesting thing which can affect your answer, and that is agricultural income. In most of the question, I personally believe there would not be agricultural income. But if there is any question, and in that question, if it is a simple line that agriculture income of 2 lakh rupees or 1 lakh rupees, so if it would be a simple sentence of like 6 or 7 words that assessee has agricultural income of certain rupees. So if you think that agriculture income is exempted, so I do not need to do this, or do not need to include it, or do not do any agreement of that, any treatment of this agricultural income. So that would cost you a lot, because there could be applicability of integration provision. Okay, who will tell me when integration provision would be applicable? There were 3 conditions for the applicability of integration provision. Who will tell me in short what were these 3 conditions? I'm not asking how to solve it. I'm just asking when integration provision need to be applicable. Agricultural income must be exceeding 5,000. Very good. Nandha Gopal is asking, sir, in capital gain, it is given that 12.5% or 20%, which is more beneficial. In this case, also we need to compute as per section 15 BAC and optional region. Look, if the question asks you that calculate beneficial, most beneficial tax, then you have to do each and everything. Okay. So first, agriculture should be exceeding 5,000 के ऊपर एग्रीकल्चर इनकम होनी चाहिए, हार्दिक इज सेइंग, एंड वेल बेसिक एग्जम्पशन लिमिट के ऊपर इनकम एचयूएफ इंडिविजुअल यूपी बीओआई. ओके, more than 5,000 agriculture income, more than basic exemption limit. When there are both business and agriculture income, when agriculture income exceeding 5,000, rubber copy T is not the correct answer. Pranav is saying if agriculture income exceeding 5,000. So first of all, nobody has given a completely correct answer. Hardik was almost gave the correct answer, but he forgot to include AJP also. So for those person, slab rate is applicable. Individual HUF, AOP, BOI, AJP, this provision is applicable. Your agricultural income should exceed 5,000 and your non-agricultural income should exceed the basic exemption limit. So if these 3 conditions has been fulfilled, then integration provisions going to be applicable. So that could change the tax liability of you. If you calculate tax as per integration provision, the tax liability would be different. And if you calculate the tax without applying integration provision, your tax liability would be different and it would be a wrong answer. So if these 3 conditions is fulfilled for any question, then you have to calculate tax as per integration provision. And I believe you must have gone through with those provisions as I have requested you to do before solving this topic. Then if the question says that you have to calculate tax which should be most beneficial for an assessee, then we have to calculate tax first of all as per section 115 BAC under default tax regime as per the provision which has been given in the question. Then we have to find out the tax liability as per optional scheme. So that would be a tax 2. So if this is tax 1, then tax as per optional tax scheme would be tax 2. Then we have to calculate tax 3, which is as per AMT tax. Now what is AMT, how we need to calculate it, etc., that is going to be discussed in this chapter only. So there would be 3 calculation of tax. One is 115 BAC tax, then the tax as per optional scheme, and then AMT. AMT would be applicable only if we are going to calculate tax as per optional scheme. If the question only asks you to calculate tax under default tax regime, then there is no AMT applicability. So then we have to find out tax number 2, which is as per optional tax regime, and tax number 3, which is AMT tax. Out of these optional and AMT, we have to take the higher one tax. That higher tax out of these 2 and 3, and the tax 1, which is as per section 115 BAC. We have to compare them, and the lower would be our final tax liability, and the respective income on which that lower tax has been calculated would be called our total income. So if there is requirement to calculate tax most beneficial to the assessee, then we maybe need to find out 3 kind of tax. One is as per section 115 BAC, then tax as per normal scheme, then tax as per AMT if applicable. There are certain cases in which AMT not applicable. So suppose if AMT is not applicable, then only point number 2 tax and 115 BAC tax, whichever is lower, need to be your final tax liability. But if there is tax as per optional scheme also there and AMT tax also there, then first of all we have to see the higher tax. Then that higher need to be compared with tax 1, that is default tax regime. And the lower would be the final answer, and the respective income on which that lower tax has been selected is going to be called your total income for that year as per income tax. Understood? So these are 5 points you have to kept in mind when you are solving this kind of question in which we have to calculate total income and tax liability. I hope it's clear. Okay, Mr. Rishabh Raj, Mr. Iswarup, good afternoon, Mr. Iswara. Mr. Rishabh Raj is asking, sorry for the disturbance, sir. I want to know when will the classes start of those students who will give exam in September 2025. So Mr. Rishabh, please send this query to the board of study via mail. They will definitely going to let you know. We do not have any knowledge regarding this. The BOS is the authority who decide when the next session classes will be scheduled. Okay. So back to now provision. Now we'll start the provision, and let me tell you, almost 80% provisions are those provision what we have already gone through in detail in various chapters. So this is our chapter income tax liability, computation and optimization. So computation of total income and tax payable is not an easy task, of course, because you have to kept in mind all the provision you have gone through, all the provision, because they all are interconnected, whether it's TDS or clubbing or set off or residential status. Even residential status concept can also affect a question of calculation of your tax liability, that you will see in question number 2 of your test your knowledge question that we will discuss. So we have almost 12 test your knowledge questions and 2 illustration that we will solve in this session also. So we have to calculate the GTI, then the deduction in section 80C to 80U that would be applicable in a section 115 BAC, or maybe if that is optional tax regime, then some more deduction is going to be applicable. Then we will find our total income. Then we have to calculate tax as per normal provision. So normal provision means optional scheme or tax as per section 115 BAC, that is our default tax regime. Then AMT taxes also. So definitely it's a headache to calculate all these things. So that's why we are here. So these headaches going to taken by us on behalf of our assessee, our clients, and of course they are going to pay for this. So this is the overview, computation of total income, how you will be able to calculate the total income. First of all, you have to find it out the residential status. Why we need to find out the residential status of any person to calculate the tax liability? What is the requirement? Who will tell me why we need to calculate why we need to find out the residential status of an assessee? Satyam Raj is asking, sir, I have a doubt, and he's asking multiple times. Same question 10 times. What is this, Satyam? Why are you sending question again and again? Okay, just wait. So Satyam was asking, sir, I have doubt about assessment if assessee have only income of capital gain under section 112 of 2 lakh. Then tax return भरना compulsory होगा according to section 139(1). So section, if he has not claimed any exemption, look, if section 112 capital gain income is 2 lakh rupees, so tax rate would be 20%. Clear? So that tax would be 24,000 rupees. And if you apply the rebate would be only 12,500. So there would be tax liability. And if there's a tax liability, you have to file your income tax return if you claim the basic exemption limit. In this case, if you claim the basic exemption limit, the tax liability would be 0. And in your question, if that is a capital gain and there is no exemption has been claimed under section 54, 54, B, D, etc. If this is only the capital gain income of 2 lakh rupees under section 112, and if he is a resident, then he can claim exemption of 2,50,000 rupees out of this income. There would not be any liability to file income tax return. But if it is only possible if he has not claimed any exemption under section 54, 54B, etc. If he have claimed exemption, then answer could be different. But as per your question, there would not be any requirement to file income tax return. Next is, okay, so I have asked what is the importance of determination of residential status, and we have received a lot of answer regarding this. Because the residential status help us to decide whether person would be taxed or not. Yes, look, as per the residential status, the income taxability will impact, because you must have gone through with those provision in which we have discussed section number 5, that is incidence of tax, which says for non-resident only 2 incomes are taxable, which is arise in India or received in India. Arise deemed to arise, received deemed to receive. Clear? So if that person is a non-resident, then we only include only those person for the taxability. Those have been received or deemed to be received in India, or arise or deemed to be arise in India. If that person is resident but ordinary resident, then all income need to be considered for finding out his tax liability. And if that is a resident but not ordinary resident, then we have to include only income arise deemed to arise in India, received deemed to received in India, and income those are arise or received outside India, but if business controlled from India, that also need to be taxed under India. So after verifying or after determining the residential status of an assessee, we first of all decide which kind of income is going to be taxable under that assessee. So of course, that is the basic part to find out a taxability of any person. If my client comes to me and asks me that how much tax I need to pay out of my certain incomes. So first question would be from my part would be this, whether you are resident, ordinary, not ordinary, or I would ask the documents to determine the residential status of that assessee firstly. And then I will find it out whether it is an individual, HUF category, etc. for rates, etc. But the first thing to find out the residential status. Kasak is saying GTI and TI can change in case of resident and non-resident. A lot of deduction would not be applicable in case of non-resident. The basic exemption limit, the rebate provision would be changed if he's a non-resident, etc., etc. Of course. Very well done. Almost all of you have sent the correct answers. Almost correct. So now the second part, after determining the residential status, the chapter 1 also consists the rate of tax, etc. But that is not important for chapter number 1. That is for to just giving you an overview regarding the tax structure in our country. But the applicability of rate would be the last chapter. In the last chapter, we should find out the what kind of rate we have to apply, because before that we have to find out the residential status, and after that the second part is classification of income under the 5 heads. So classification of income under 5 heads of income. So after finding out whether that person is an resident or non-resident, or ordinary or not ordinary. Then we have to ask that assessee that what kind of income you have earned. He will tell us that he earned business income or interest income or dividend income. So we have to classify those income under different heads of income as per the provision of income tax, and the taxable part need to be included. If any kind of income is exempted out of those income, we will not include that income for the purpose of tax calculation. So he will give us the information regarding all the incomes, whatever he has earned, and we will decide on the basis of the provision or the things we have gone through, whether it's going to be taxable or exempted or partially exempted and partially taxable. So income could be categorized in three categories: going to be 100% taxable or 100% exempted, or it could be partially exempted or partially taxable, depending upon the provision of Income Tax Act. So if that is fall under the category of salary income, what was the charging section of salary? What is the charging section of salary, students? Okay, somebody send the answer. Pallavi is saying 15, Hardik is saying 15, Veda is saying 15. Well done. Of course, the charging section of salary 15 says that if there is an employer-employee relationship, then the payment will fall in the category of salary head. Very well done. So what is the charging section of house property? Very well done. Section 22. Charging section of PGBP? 28. Very well done. Capital gain? 45. Beautiful. And other sources? 56. Correct. So these charging section we have gone through with all the provisions of these heads in detail, which describe what kind of income is going to be included and how it is going to be calculated. What exemption we will provide in salary deduction, what house property deduction, what PGBP, the manner to calculate income under PGBP, etc., etc., etc. So you have to find out taxable income under these various categories of head of income. Then after calculating this, we have to apply the provision of clubbing, compute income under each head, applying the charging and deeming provision and providing for permissible deduction exemption thereunder. Fine. So this is regarding all those calculations we have gone through. Then applying the clubbing provision. So we have to club the income. So if there is some income of minor or spouse income in certain cases, which we have transferred to avoid the tax, etc., that you must have gone through under clubbing provision. These notes going to be added back. So my question is, if income clubbed of some other person, if there is income of some other person which is going to be clubbed in assessee income, whether it's a minor person or spouse or son's wife, etc. So in which head clubbed income is going to be added? Under which head this clubbed income? Under which head? I'm not asking the section. Are they not asking the section? Under which head that income is going to be clubbed? Listen the question first carefully, then answer. So if supposed minor son income is going to be clubbed in the hands of his father, then under which head that clubbed income is going to be clubbed in the hand of his or her father? Or suppose if spouse income, wife income is going to be clubbed in the hand of her husband, under which head of income that is going to be clubbed? Anil is saying clubbing is separate, sir. Somebody is saying other source. Veda is saying salary. Abhishek is saying it will clubbed under the head in which he earns income. Like, sir, wife income from house property, then house property head. Correct. So some of you have given the correct answer. Those are saying income from other source. Either they did not understand the question, or even if they understand the question and if they are answering income from other source, that would be a wrong answer. So the correct answer, that is going to be clubbed in the same head in which that would have been clubbed. In which head that would have been added if it had not been clubbed. So if minor earn any income from salary, and if suppose that is going to be clubbed, then it's going to be clubbed in the head of salary of his parent having higher income. If minor earn income from business, then the income is going to be clubbed in the hands of his parents who is having higher income under the head PGBP. If minor is earning income from interest, then is going to be included under income from other source. So there is no separate head of clubbing, first of all. Fine. So the income which is going to be clubbed in our hand, in the hand of assessee, would be showing under the same head of income in which it would have been shown if there is no clubbing provision. So if wife is earning salary income and due to some provision, that salary income is need to be clubbed with the income of her husband. So under salary head only, that income is going to be clubbed in the hands of her husband. I hope it's clear. Okay? You must have gone through with the provision. Now the concept is set off. So set off also must have been taken. And in set off and carry forward, you are having two power. One is set off and one is carry forward. So what is the difference between set off and what is the difference of set off and carry forward and set off? So set off talks about current year losses set off in current year income. And there is multiple subheading like inter head set off and intra head set off also. There are some restriction, etc. Also, you must have read all those provisions. So after calculating various income under different head, then we apply the clubbing provision. Then we apply set off provision, and those losses which has not been set off under current year income due to any provision need to be carry forward and set off as per the provision of the act. After doing these two concepts, after the applicability of clubbing and set off, we will arrive at gross total income. And from this gross total income, we will provide deduction under section 80C to 80U. Again, if you are following section 115 BAC, then only I guess 3 deductions are allowed. 80 double J double A, 80 I guess CCCH, and I guess 180 CCD2. Fine. So there are certain only some deductions, those are allowed if you following section 115 BAC, and if it is optional scheme, majority of deductions are technically allowed. Fine. Then we will arrive at total income. So we can call it total income, income chargeable to tax, or one more name that could be taxable income. So that would be my total income on which I have to calculate the tax as per section 115 BAC or as per normal provision. And with this total income only, we have to calculate AMT also. So if we need to calculate the AMT, we need this total income as per normal provision of the act. How that would be done, we will see later. Now you can see this, the format or the diagram or the chart which has been explained over here, that has been discussed in short over these provisions one by one. That is meaning of total income. We all know what is the meaning of total income. The total income of an individual is arrived at after making deduction of chapter 6A from GTI as we learned earlier. GTI means computation of 5 heads of income after applying the clubbing and set off provision. Clear? Now, capacity in which income is earned by individual in his personal capacity under 5 heads of income, there is nothing new. We have already gone through with these all provisions, so you can read these provisions. As a member of HUF, as income person including the income of the individual, that means clubbing provisions are there. Computation of total income and tax payable by an individual. So it says you have to follow step number 1 till step number 2. For computing total income of an assessee. So after that, step number 8, we will tell you how to calculate tax. And from step number 9 to 15, we will tell how to calculate tax on such total income. So what are the steps? Of course, those steps are exactly the same as we have gone through with the provision chapter wise. First one off, you have to find out the residential status of that assessee. So whether it's a company, it's a partnership firm, it's an HUF, it's an individual, then there are separate provision to find out the residential status of those assessee. So you have to find out the residential status of assessee. So on the basis of that, you can decide the incidence of tax. And on the basis of incidence of tax, you can decide which income need to be taxed in India and which income is not need to taxed in India. Clear? So status could be majority three type: resident and ordinary resident, resident but not ordinary resident, and non-resident. There are also concept of deemed resident under section 61A. Based on your total income, if you have earned total income from Indian sources exceeding 15 lakh rupees and do not paid any tax, whether in India or outside India, so you could be called a deemed resident. So in detail, we have discussed those provisions under residential status. Clear? Then the second part is classification of income under different heads. Of course, the salary, the house property, the PGBP, the capital gain, and other source. So respective deduction exemption need to be given while calculating income under these heads of income. Then computation of income under each head. So these are 5 heads of income. You have to find it out which income needs to be taxed in which head. And when you decided that, then you have to calculate the income. You have to compute the income under respective head, applying the charging or deeming provision, providing exemption, deduction, etc. Like for salary, you have to provide the exemption, HRA, children allowance, etc. under only optional tax regime. So you have to be very careful when you calculate tax or when you calculate income under varied sets of income, as I have asked that kindly make short notes. So you will be able to find it out with which kind of deduction need not to be given or exemption need not to be given in case of default tax regime or under optional tax regime. There was a standard deduction under salary head, which was earlier 50,000 under both regime, whether you are opting for optional or you are going for default tax regime. But from assessment year 25-26, it has been changed. So now the standard deduction is 50,000 rupees under optional regime, and under default tax regime, it's 75,000 rupees. Clear? Satyam Raj also gives solution, also give answer of charging section 15, 22, 28, 45, 56. Well done, Satyam. Okay. Disallowance, etc. You have to keep in mind when you're calculating income under various heads, separate heads. Okay. Like in the PGBP, there was provision there, section 35 deduction. You cannot claim research, scientific research deduction section 35 if you are going through default tax regime. So these kind of deduction not allowed if you are going through default tax regime. Then step number 4 says clubbing of income with spouse, minor child, even the income of club, minor child clubbing, the exemption section 32, which is I guess 1500 rupees for each minor child, is not applicable under default tax regime. In order to prevent evasion of income tax by such means, clubbing provision have been incorporated in section 1961, under which income arising to certain person like spouse, son's wife, minor child have to be clubbed income of person who has divided his income to such person for the purpose of computing tax liability. So section 1032 provision, that is 1500 rupees also there, that is not applicable in case of default tax regime. You can claim this benefit only if you shift out of the default tax regime. Then we have set off or carry forward and set off of losses provision. Of course, you must have gone through with those provision also. So technically chapter or unit number 9 is, I have told you that there is nothing new. Only 2 topics are new for you, that is AMT and of course the salary structure. Everything else we have already covered under various heads, already gone through with this session or earlier sessions. Carry forward and set off of losses. Again, this point also must have been discussed with you under set off provision. It must be noted that losses from an exempted source cannot be set off against profit from a taxable source of income. So if any income is exempted, suppose agricultural income is exempt. So if any income is exempted nature, that could not be an income. So that income cannot be used for setting off of any loss also. So in the category of set of chapter, agricultural or any income which is exempted is having the character of nil. That is not going to be used for the purpose of taxability, as well as you cannot use that income for set off also. Clear? Share of a loss from a partnership firm cannot be set off against sole proprietary business income of the partner, since share of income of the firm is exempted under section 10(2)(a). Now computation of gross total income. We all know that deductions from gross total income. Deduction in respect of certain payments, we know deductions were like payment basis was there, then income based deduction was also there was other deduction also. So those kind of provision you must have gone through under deduction chapter also. Then we have computation of total income. So if we deduct deduction under section 80C to 80U and section 10AA deduction, that out from your GTI, that would be your total income. It should be rounded off to the nearest of multiple rupee. Clear? So now that total income is the income on which tax need to be charged. Now step number 9 would start from calculation of tax. So there would be rates of taxes on the total income under both regime, that was direct default tax regime and of course the optional tax regime. And these slab rates, the rebate provisions, the surcharge provisions, the education cess provision, we have already gone through in chapter number 1. So that is going to be a recap for you. So concessional rate under default tax regime under section 115 BAC of the Income Tax Act. For individual, there is a slab rate and basic exemption limit. At present, the basic exemption limit is 3 lakh rupees under the default tax regime. Here are the rates. Up to 3 lakh rupees, the rate would be nil. 3 to 7, it would be 5%. 7 to 10, it would be 10%. 10 to 12, 15%. 12 to 15, 20%. And above 15 would be 30%. So I have explained this kind of rate in chapter number 1 like this, that up to 3 lakh, it would be nil. Next 4 lakh, the tax rate would be 5%. So the tax could be maximum 20,000. Next 3 lakh, the 10%. So the tax could be maximum 30,000. I have also told there that if the income is 15 lakh, then what is going to be the tax? Yes, Hardik is saying 1.4 lakh. Exactly. So if there is a question in which income has been given, suppose 20 lakh rupees, and you have been asked to calculate tax as per default tax regime. So up to 15 lakh, if you remember this shortcut, that the tax would be 1,40,000. So we just need to calculate tax on exceeding 15 lakh at the rate of 30%. That would be 1,50,000 to save your time. From 10 to 12 lakh, that means next 2 lakh, rate is 15%, again 30,000. From 12 to 15 lakh, that means next 3 lakh, the rate would be 20%, that means 60,000. So automatically that would be 1,40,000. So up to 15 lakh, we can directly calculate that tax would be 1,40,000. Anything over and above this 15 lakh is going to be taxed at 30%, and that is not the special rate of tax. The special rate of tax we have already gone through in capital gain chapter, deduction chapter, other source chapter, etc. There are separate specific rate for other incomes also. The optional schemes tax rate is up to 2,50,000. Below up to 2,50,000, it's no tax liability for person those are having below 60 years of age and resident or non-resident. Up to 3 lakh rupees benefit if you are a person having 60 year or above age but less than 80 year and you are resident. So basic exemption limit is 3 lakh, and up to 5 lakh rupees is the basic exemption limit for those person those are super senior citizen. That means age of over or equal to 80 year and resident in India. If income exceeding your basic exemption limit, then up to 5 lakh, the rate would be 5%. Income exceeding 5 lakh rupees up to 10 lakh, then the rate would be 20%. More than 10 lakh, the rate would be 30%. So I have also explained in detail in chapter number 1 by different kind of examples, etc. We are having special rate of taxes that has been covered under capital gain chapter. There are multiple tax rates having in different situation: 12.5%, 20%, 15%, 20%, 10%, etc., etc. So for that purpose, you can go through with capital gains chapter. We have also read those topics with the help of a diagram also. Now, surcharge and rebate under section 87A. Surcharge is an additional tax. Again, when surcharge is going to be applicable. In chapter number 1, we have discussed that in detail also. With the help of a diagram, I have explained you how to apply the surcharge in different circumstances. And as I have asked you also in the last session, that please revise those topics. So for the purpose of calculation, for the purpose we need surcharge, and surcharge is very important for your examination purpose because there is multiple cases for surcharge in different situation. For section 115 BAC or for optional tax regimes, surcharge provisions are very complicated also because it is having multiple rate. In some circumstances it's 10%, it could be 15%, it could be 25%, even 37%. In the same question, for some income, it could be 10-15%, and on other income, we have maybe calculate 25% or 37%. So that is a surcharge chart which we have gone through in chapter number 1 also. Let me revise it a little bit. So there was a case 1. It says if total income does not consist long-term capital gain under section 112A or 112 or short-term capital gain under section 111A or dividend. So when we discuss chapter number 1, this topic in chapter number 1, then you are not familiar with what is long-term capital gain. What is 112A? What is 112? What is 111A? But now you know what exactly we are talking about. What is section 112A? What is 112? What is 111A? So now that is more clear to you that which income we are talking about. So if there is a question in which these income does not includes, we do not have any income of 112A, 112, 111A or dividend, then surcharge would be normal. Up to 50 lakh, there is no surcharge. We all know that. If the income exceeding 50 lakh up to 1 crore, the surcharge would be 10%. If it is exceeding 1 crore up to 2 crore, rate would be 15%. If it is exceeding 2 crore up to 5 crore, the surcharge rate would be 25%. If it is more than 5 crore, then surcharge rate would be 37% on tax. I've also told you the meaning of surcharge. What is the meaning of surcharge? What we call that? Surcharge meaning was it is a tax on, fill in the blanks. It is a tax on, correct, very tax on tax, correct. So surcharge is not going to be calculated on income. It needs to be calculated on your tax. So it is called tax on tax, clear. So if these income, any of these income does not include in your income, then there is no issue. Rate would be 10, 15, 25 or 37. But if these income or any of these income has been included in your total income, then what will happen? So now we are having 3 cases. Case number A, and it says if total income including 112A, 111A, 112 or dividend is up to 2 crore rupees. If there is these income, any of them or all of them, and after including these income, your total income is up to 2 crore, not more than that. Suppose your PGBP income is 1.5 crore and your 112A income is suppose 40 lakh rupees. So your total income is 1.90 crore. So that means we are talking about this case. Clear? So now if your case fall in this category, but you have income If suppose there is no income of 112A, then your income is 1.5 crore. That would fall my this category case. But if there is section 112A income or 112 or 111A or dividend income, and after including my income is 1.90 crore. So now we are talking about case number A. Now it says if income exceeding 50 lakh up to 1 crore, then 10% surcharge would be on all tax. But in this case fall in this category. So it says whatever would be your tax liability. Now you will calculate tax on PGBP as per slab rate. So calculate that tax upon 1.5 crore. And section 112A, we have to calculate tax accordingly. So the tax of section 112A, we have to calculate it. And the total of that tax, now surcharge would be 15% on the total of both tax of PGBP and section 112A. Clear? So this accordingly, we have to calculate the surcharge. Now it says if total income, including these income, exceeding 2 crore. Now suppose PGBP was 1.5 crore and 112A was 1 crore. So now that is 2.5 crore. Now my case would fall under B category. So now it says surcharge would be 15%. So we have to calculate tax as per slab rate on PGBP income and as per section 112A category income. Whatever will be the total tax, surcharge would be 15% fixed. Clear? Now the C condition says if total income without considering these income exceeding 2 crore. Now it says suppose PGBP is 3 crore and 112A is 1 crore. Now if you see this case of 4 crore rupees income, is it fall in this category? No, because this category includes only those cases in which there is no specific income of 112A, 11A, dividend or 112. Can it fall in this category? Cannot fall in this category because income is exceeding 2 crore rupees after including this income. Clear? And of course, it cannot include in this category because it would be included in this category if the income is exceeding 2 crore rupees after including this special category of income. But my case, income is exceeding 2 crore rupees or without even including these special rate of income. So if my income without even including section 112A, 111A or 112 or dividend income, if that is exceeding 2 crore, then point C would be applicable. And now in this category, if you fall, then surcharge rate would be different also. Rate of tax would be of course different because for PGBP, we will apply the slab rate and for 112A, there would be special rate. So rate would be different, tax would be different and even surcharge would be different. So now whatever would be the tax of this section 112A, the surcharge rate would be 15%. And what is the tax on PGBP income? If it is more than 2 crore up to 5 crore, then whatever is the tax on PGBP, the surcharge rate would be 25%. And suppose if it is not 3 crore, it's more than 5 crore, suppose it's 8 crore, then whatever is the tax on that PGBP, the surcharge rate would be 37%. So the tax on 112A, surcharge on 112A would be 15%. Same case, tax on PGBP would be as per slab rate. Surcharge on PGBP, that would be 25% in our case. If income is 3 crore PGBP, that would be my surcharge. So total tax would be this plus PGBP tax. Total surcharge would be this plus this. And after that, on total amount, education cess need to be applied. That would be really complicated if this kind of provisions are there. So that is under default tax regime. If that is, sorry, this is for optional tax regime. If the question belongs to default tax regime, all provisions are same except there is no 37% rate of surcharge. That would remain maximum 25% in all cases. Only 37% need to be ignored. Everything else is exactly the same as per the normal surcharge provision. Back to the notes. So that was surcharge provision. Okay. Now old tax regime, new tax regime. So new is technically now the default tax regime we are saying, that is new tax regime. Default tax regime. This is our optional tax regime. So what should we choose? Of course, we need to choose that tax regime by which we need to pay tax lower than other regime. So these are the surcharge rates which has been given over here in detail. If you have any confusion, kindly refer to your study material, of course, that has been exactly explain the correct rate, etc. Now the rebate also is quite confusing. So we are having two kind of rebate. One is for optional tax regime and one is for default tax regime. In case of optional tax regime, the rebate provisions are quite simple. It says if your total income is up to 5 lakh. So Timraj is asking, AMT is applicable for our intermediate syllabus? Yes, Satyam. That has been included in this chapter and we are going to discuss AMT provision also. Mrs. Sinchana RK saying live class not opening. You can go on YouTube. It is running over there. Okay. So the rebate provisions for optional tax regime is very simple. It says if your total income is up to 5 lakh rupees, then there would be a tax rebate of maximum 12,500 rupees or up to the amount of tax, whichever is lower. Clear? But for rebate for default tax regime is having certain different kind of provision. It is having actually one provision is simple. It says if your total income is up to 7 lakh rupees, then you can claim a rebate of 25,000 rupees or up to the amount of tax, whichever is lower. But one more explanation has been included in that rebate, which is almost like marginal relief. Marginally, we have discussed in, of course, chapter number 1, basic concept. And it says if there is a case when your tax exceed your income, then the difference of that tax and income could be claimed as a discount, which is called marginal relief, and which could be reduced from the total income for total tax liability of your income. So in the same case, in the same procedure, rebate need to be given under default tax regime also. If you're under default tax regime, your income exceeding 7 lakh rupees, but the amount of tax what we need to pay is exceeding the amount of income exceed the from 7 lakh rupees, need to be allowed as a rebate. So we will solve it with the help of an example also. We have already discussed and solved this kind of question in chapter number 1 also. So rebate under section 87A, section 87A provides a rebate from the tax payable by an assessee being an individual resident in India. As discussed in chapter number 1 in detail, rebate to resident individual paying tax under default tax regime, it says if total income of such individual does not exceed 7 lakh, so that means you can claim a rebate up to total income of 7 lakh rupees. The rebate shall be equal to the amount of income tax payable on his total income for any assessment year or amount of 25,000, whichever is less. Now point number 2 has added that a special provision which is almost like the concept of margin relief. If total income of such individual exceeds 7 lakh, exceeds 7 lakh and income tax payable on such total income exceed the amount by which the total income is in excess of 7 lakh, the rebate would be as follows. So we have 3 steps: total income or 7 lakh. Suppose the total income is 7 lakh 20,000. So as per step number 1, 720 minus 7 lakh, that would be my A. So A would be 20,000. Now step 2 says calculate the tax payable on total income. That means now calculate tax on 7 lakh 20,000. So if you calculate tax on 7 lakh 20,000, that would be 22,000. Now rebate says if B is more than A. In this question, of course, B is more than A because B is my 22,000 and A is 20,000. So rebate would be B minus A. That would be 2,000 would be my rebate. So what I will do with this rebate? I will deduct this rebate from my tax liability. So my final tax liability would be only 20,000, not 22,000. We have solved example also over here. In normal case, the rebate is up to 12,500 rupees if the TI does not exceed 5 lakhs. So in this case, even if TI exceeding with 100 rupees, you have to pay the tax. There is no benefit of as per default tax regime. In case of exceeding income, 7 lakh is there. Rebate is not applicable under section 87A. On section 1128, 10% of course. Now we are having how to calculate AMT. Now the AMT provisions are here. Now this is new provision which need to be discussed in this chapter. And before discussing it, I have asked you to kindly revise the provisions of marginally basic concept before discussing these topics. I guess it's better that we should take a break right now and then we will come back. We will discuss the provisions of AMT as well as the salary structure provision also and the questions of test your knowledge and the illustration from this topic. So, Mr. Bhargav, can we take a break? Mr. Bhargav. भार्गव जी ब्रेक कर दें आसमान welcome back to all of you. I believe you must have your tea, coffee, etc. for the energy. And we were discussing the provisions of total income, calculation of tax, etc. So the topic was alternate minimum tax. This is a very interesting topic, and you might feel why it is here. Actually, there are topic like MAT, minimum alternate tax, that was applicable for companies. And I guess that has been introduced in 2001, I guess. And after certain years, after some time, the income tax has applicable for other than companies. MAT is for companies. There is no concept like MAT for other than companies. But after some time, income tax has introduced AMT. The same concept like MAT, the AMT concept has been introduced, and that is for other than companies. So why AMT is here? That is very interesting. But first of all, you should understand why AMT is here. Okay, somebody was asking, sir, in partnership, TDS section 194T will be applicable to your syllabus. I guess in your TDS section, section 194T is not there. So that means that is not applicable. Okay? Abhishek Mishra is asking, so under default tax regime, total income up to 7 lakh rebate under section up to 25,000. And if it exceeds 7 lakh, then rebate will calculate by these steps. Am I right? Yes, exactly right. So if the income is up to 7 lakh, then rebate would be 25,000 or amount of tax, whichever is lower. And if income exceeding 7 lakh rupees, then you have to calculate rebate by these means. Correct. So why AMT is here? Why income tax has introduced AMT, or what is the concept of MAT? So MAT would be in your final syllabus. So we are discussing AMT concept over here. The almost same concept has been for MAT also. That is not the part of our syllabus. But the procedure, the purpose, the object was exactly same as per MAT. To understand the AMT concept, first of all, you have to understand these things, that there are two kinds of profit which is declared by an entity. One is as per accounting provision and one as per taxing provision. Now, what was happening under accounting? Suppose there is a business which claims section 10AA deduction. You must have gone through with the provision of section 10AA, that is organization in the special economic zone. So if you are running an organization in a special economic zone, then you can claim 100% of your profit or 50% of your profit, which is profit into ET upon TT by this formula. Export turnover upon total turnover, a certain amount of profit could be allowed as deduction. We can say could be exempted. So for initially 5-year, deduction would be 100%. Then for next, I guess 3-year it was 50%, and for balance 2-year, for next 5-year also 50%, and for next 5-year also you can, after satisfying some condition, you can extend this reduction for 50%. So suppose this business is the business on which section 10AA deduction is applicable. And after this sale and expenditure, suppose the net profit comes to, suppose that is 10 crore as per accounting provision. So there is no deduction under section 10AA under accounting. So accounting will show the profit is 10 crore rupees. Because 10AA kind of benefit has been provided under taxation provision. So when this business will present their financial statement under income tax provision, again after the sale and expenditure, suppose the net profit comes exactly the same, 10 crore rupees. But because there is section 10AA, and suppose the initial 5-year provision has been applicable, so 100% is going to be allowed as deduction, suppose. of this profit. So that means this full profit is going to be allowed as deduction, and the remaining profit for the purpose of tax would be nil. So there would be no tax liability from this organization, even when the organization is earning real income of 10 crore rupees, but because due to this benefit of section 10AA, there would not be any tax collection from this entity for next 5 years, or after 5 years, even if profit is 10 CR, and if he is availing the benefit of 50% reduction, then even government would not be able to collect tax on 5 crore rupees, which is going to be allowed as deduction. So what will happen? This revenue will not be collected by the income tax department. So that would be a revenue loss for the department. And if department will not earn revenue, they will not be able to spend for the infrastructure of our country, for the help of people, poor people, for the purpose of education, hospitalization, and for other benefit for which the tax collection is mandatory in our country. So how the country run? By this collection of tax. So those person who was actually earning huge profit, the tax collection is nil due to the benefit of section 10AA. There could be other circumstances also, like section 35AD, the specified business. Suppose there is section 35AD, sale under accounting is 15 crore and expenses suppose 7 crore. They build a building of 10 crore rupees. Accounting will provide the depreciation. Suppose at the rate of 10%, they will claim depreciation of 1 crore rupees. So they will have a net profit of 7 crore rupees under accounting provision. Because section 35AD is not applicable under accounting provision. But if this organization is going to show their profit under income tax provision, then what will happen? Under income tax, sale would be 15 crore, expenditure upon 7 crore, and if they build a building for it, suppose 10 crore, then income tax allowed section 35AD, that is deduction for a specified business for the expenditure, those has been capitalized except land, financial instrument, and goodwill of business. That you must have gone through under section 35AD of PGBPA. So for that purpose, there would be claim of 10 crore rupees. So technically, there would not be any profit. There would be a loss of 2 crore rupees. So technically, what I'm trying to tell you that there would not be any tax even then where there is a real profit. But tax collection would be nil. In first case, section 10AA is there. The tax collection would be start after 15 years, the normal tax collection, because for first 5 years, there would not be any tax. After that 5 years, there would be only 50% collection of tax, and that could also be extended for next 5 years. So after 15 years, this organization is going to pay tax on the income which earned by that organization. And suppose this organization has been closed after 7 years or 10 years. So what will happen? Government gave the benefit of tax exemption to this organization, assuming that we will earn revenue in future after 15 years. Because he is establishing his business in a special economic zone, providing employment, he is in a manufacturing unit, he will give us tax after 15 years. So to encourage that business, we have provided him the benefit of 15 years of tax exemption or deduction. And suppose it has been shut down after 5 years, 10 years, 11 years, or before 15 years. That government would be in a huge loss of tax due to this closure of business. It will happen. So what was our expectation from that business? That no problem, we are not earning tax from this business now, but we will earn tax after 15 years. That's not going to be happen if this business shut down. In the same case, because under accounting, we will claim depreciation every year. 1 crore for first year, then 1 crore in second year. So the profit would be remain same in every year. But if we are talking about section 35AD, then what will happen? Suppose this building value is not 10 crore. Suppose it is 20 crore. So the loss would be 12 crore. So we are thinking no problem, from next year he won't able to claim any deduction. So we can earn tax from next year. Suppose from next year his sale is now 10 crore, his expenditures are suppose 9 crore. He is having a net profit of 1 crore. So the loss which is carrying forward is going to be set off. Then there would again be no tax collection for next year. Until this loss is going to be set off, then there could not be any tax collection. And suppose after 3, 4, 5 years, when this loss has been set off completely, this business shutdowns. So again, income tax would be at a loss situation. They might be thinking that we are able to collect the tax in future year, because unless otherwise, accounting is allowing depreciation every year at a constant rate, and you allow complete 100% deduction in first year. So you are expecting from next year we are going to collect tax, but because of the huge amount of building value, there could be a huge loss that is need to be set off in future year. And maybe before the set off of those losses and before starting of collection of tax, that business is again going to shut down. So in both cases, income tax would be at a great loss of tax. So to overcome this problem, income tax decided that for the purpose of collection of tax on a regular basis, we will start a new topic that is called AMT, a new collection process, a new tax calculation method, that is alternate minimum tax, which is MAT in case of company, and for other than company it is AMT. Now what income tax has been going to do, that as per accounting, in the first example, our profit was 10 crore. But as per income tax, due to income tax benefit of section 10AA, this net profit of 10 crore due to 10AA reduction become nil and no tax collection. Now AMT provision says that whatever was your total income as per income tax provision, as per normal provision of tax, not as per accounting. So in this case, suppose it's nil. If section 10AA benefit you have claimed, then we have to add back that into your that total income, and now this would be treated as your adjusted total income. It will call your ATI, adjusted total income. Clear? So this adjusted total income would be your income for the purpose of AMT. And you have to pay tax at the rate fixed 18.5%. This is a fixed tax rate. And surcharge, if applicable, as per the normal surcharge provision, and 4% cess. So now tax would be, as per income tax, the tax would be nil. And now your tax would be, AMT tax would be this. Suppose this is 1, this is 2. And you have to pay higher tax. So at least you have to pay 18.5% plus surcharge, of course, in this case, and cess also. So that AMT tax you have paid would be the tax you need to pay for this year. Now, if this provision is there, now assessee will object it, that now what is the benefit of giving me section 10AA? Same provision has been made, section 10AA, or if section 35AD deduction, some specific deduction has been mentioned, only those deduction if you have claimed earlier, that need to be add back to calculate the AMT. So in that case, of course, your AMT liability would be higher, and we can say it would be almost equal to the accounting profit, would be almost equal to your AMT. Almost. It's not always that it would be same. But your accounting profit and your AMT profit almost is going to be near close to each other. So in that scenario, what will happen? You have to pay a tax. And suppose in this case, your tax liability is suppose 2 crore rupees. This is your income tax liability for this year. Now, assessee will say, what is this? If I need to pay tax, then why this deduction is there? What is the benefit of claiming section 10AA when you already taxed my income? And if you have promised that if I'll go for section 10AA, I am going to open my organization, my industry in special economic zone, then I need not to pay tax. And now you apply AMT provision and you are asking me to pay tax of 2 crore rupees. So now income tax say, wait, this is tax and this tax can be claimed by you as AMT credit. You must have going with the provisions of GST also, and there is called input tax credit. So the amount of credit you can utilize from your sales tax liability. So that kind of credit has been provided by the income tax department, that whatever tax you will pay and what amount of tax if exceeding your normal tax. So what is my normal tax liability in this case? 2 crore was my AMT tax and normal tax was 0. So the difference would be my AMT tax credit. Suppose the normal tax was 20 lakh rupees, suppose 20 lakh, then it would be 1.8 crore. So whatever excess you will pay as AMT tax, that would be treated as your AMT credit. So we are not charging you tax, we are just collecting the tax. Like advance tax, we are collecting this tax in advance and we are going to provide you the AMT benefit, the credit benefit for this tax. Now what will happen with this AMT credit? Income tax say, do not worry, this is the kind of credit, we have collect this tax from you, but we are going to give you the benefit of this tax. How? Suppose in next year, year number 2, your normal tax as per income tax, suppose is 50 lakh rupees, and your AMT tax, suppose 80 lakh rupees. So higher would be again AMT tax. So in this case, your tax credit would be 30 lakh rupees. So total tax credit would be 2.30 crore cumulative. First year 2 crore credit and now 30 lakh credit. So you are now having 2.30 crore credit. You have to pay this 30 lakh rupees to the government. But you have to pay this 80 lakh rupees to the government. 80 lakh would be the payment. And out of which 30 lakh would be your credit. So total credit would be 2.30 crore. What will happen with this? Let us suppose in third year, your normal tax is 1 crore and your AMT tax is suppose 60 lakh rupees. Now, if in any year your normal tax is higher than AMT tax, then only in that year you can use the credit. You can only use the credit in which your normal tax is higher than your AMT tax. How much credit you can utilize? Up to the amount of total credit or the difference of tax of this year. How much is the difference? The difference is 40 lakh. So 40 lakh rupees or 2.30 crore, whichever is lower can be utilized as AMT credit. So in my case, 40 lakh can be utilized as AMT credit. So what is the amount of tax payment in this year? So that would be 1 crore or 60 lakh, whichever is higher. So we need to pay 1 crore. 40 lakh would be your credit. So you need to pay to the government only 60 lakh rupees in this year. And because you are paying through normal tax is higher, so there would not be any credit of this 60 lakh. And your remaining credit would be now 40 lakh you have used in third year. Your balance is now 1.90 crore. So even if in the fourth year, normal income tax is higher and AMT tax is lower, up to the amount of difference of that tax, you can claim the credit of those AMT credit which has been paid by you earlier. And this is having 15-year benefit. So for next 15 years, you can take the benefit of this AMT credit. If the 15-year has been elapsed and you are not able to take the benefit of AMT credit, then there would not be any AMT credit. So what will happen with this? If you must be thinking that then the thing is same. If the credit is going to be received by the assessee, then what is the use of collecting that tax? The collection of tax is very important because for the purpose of running this country, we need regular cash flow. We need regular collection from the point of view of government. We need regular collection of tax. So if we are receiving this tax, we are receiving 2 crore rupees tax, and we will give the benefit to that assessee. In the year, his normal tax would be higher. And you know when it will be there? If section 10AA is applicable, then after 15 years it would be happen. That is, normal tax would be higher than his AMT, or after 10 years, or after 7 or 9 years. And suppose if 15 years has been passed off, then you need not to give any AMT credit. So government will collect some amount of tax due to this AMT provision regularly. If section 35AD benefit you have taken, so from first year, you might need to pay AMT tax. And if your business shut down, suppose now business shut down, then this AMT tax is with government, you cannot take it back. So in those scenarios, when after 15 years or before 15 years, normally business shutdowns due to section 10AA or 35AD, income tax was not able to collect anything. Now government will collect this AMT tax every year from those organizations. Those are in real earning income. In real, they are earning income, but technically they are not going to pay anything due to the benefit of section 10AA or due to the benefit of section 35AD, etc. So in those cases, government will collect a certain amount every year from the assessee and will provide you the benefit of tax credit within 15 years, in that year in which your normal tax liability would exceed AMT. So that was the whole scenario, whole concept of AMT. So now we will discuss the provision. For the purpose of examination, that is not going to be asked that what is the scenario of AMT. That is for your knowledge, so you will understand why this provision is over here. So these provision has been made for the collection of regular tax collection by the income tax department from those organizations, those declaring huge profit. Those are declaring huge profit under accounting provision, but technically not providing any tax, not giving any tax to the income tax department. So moving on to the provision. Pallavi saying, sir, if in future there will be no profit in SEZ business, then can we claim refund? No, there is no refund procedure. In next 15 years, you can take credit only if there is income tax liability is higher than the AMT. Only in that situation, you are able to take the benefit of that credit. Unless otherwise, that AMT credit will be lapsed. It would be remain with the government. Anil is asking, sir, in my case, my normal income tax liability is 2 CR and amount is 1 CR. AMT is 1 CR. Can I claim 1 CR credit during the previous year? Look, your normal tax liability is 2 crore and AMT is 1 crore. So you have to pay higher tax. That means 2 crore. Now the difference of 1 crore AMT, you can take the credit if you have earlier paid AMT tax higher. So 1 crore credit you can only claim if your AMT tax has been higher in the earlier year. Suppose there is an example. Suppose in first year, normal tax was 2 crore and AMT tax was 1.5 crore. So in this case, you have to pay tax 2 crore rupees, whichever is high as per normal provision. So in this situation, there would not be any AMT credit there because you have to pay tax as per normal provision. But yes, if earlier you have paid tax as per normal provision 0 and AMT tax was suppose 1 crore, then the higher you must have paid 1 crore. Then you are having AMT credit of 1 crore rupees in your pocket. So you can utilize this to pay this 2 crore. Out of this 1 crore, 2 crore, 1 crore need to be used by AMT credit and only 1 crore need to be paid to the government separately. Fine. So in my case, normal income tax liability is 2 crore and AMT is 1 crore. I can claim, okay. If in 15 years AMT not available, it cannot be claimed. Yes, it cannot be claimed. And 15 years need to be calculated as per every year. Like for first year, whatever credit you have, next 15 year you can utilize. Or if you have any other credit for second year, you have again earned it. Then 15 years will be counted from that year, next 15 years. Fine. So we are having example also for this. We are having provisions also. Do not worry, when we will discuss provision with the format, the concept will be more clear. That is just an overview of the concept of AMT, because generally what happens, we read the provision of AMT, we understood how to calculate it, but we do not understand why the AMT is there. If the credit is there, what is the need of applicability of AMT? So that could be a problem. So that's why I have just cleared you that what was the concept of AMT in this scenario? Why government introduced it? What was the intention of income tax department? I hope that is clear to you. So now the provision part. The Income Tax Act 1961. Now the study is explaining this much. So you might not be able to understand with the study language that what was the logic of department to apply these provisions. So now you must have understand everything, and now you will get it why provision has been made, what could be the benefit, what could be the disadvantage. So if a business shutdowns, now government would not be worried because they have already collected AMT from that business. So they have earning some sort of revenue from that organization. Now assessing problem, because if he had not used that credit within 15 years, then that credit is going to be lapse. The Income Tax Act 1961 contains profit-linked and investment-linked deduction, like Section 35AD, 10AA, of course. Section 35AD, business is exempt, not exempt. 35AD is a deduction satyam. The business is not exempt. That is deduction availability. How this business loss is set off against same head of income, you should go through with the provision of set off chapter. 35AD business not exempted. Okay. So taxpayer who exercise the option to shift out of the default tax regime under section 115 BAC and are eligible to claim such deduction end up paying no income tax or marginal income tax through they are capable of paying higher taxes. It has to be kept in mind that our government also need regular and consistent inflow of tax, which is one of the major source of revenue to fund various expenses for the welfare of the country. So regular cash flow is very, very essential. If a business run on credit sale, and if the creditor is going to be recovered after a long time period, then there could be a cash flow problem in the business. So a profit generating business could also be shut down if there is not regular cash flow under business. Just a second. Hence, in order to ensure payment of reasonable tax by such zero tax paying, marginal tax paying entities, the concept of alternate minimum tax has been introduced in the Income Tax Act. Chapter so and so contains the special provision for levy of alternate minimum tax in case of person other than a company, because for company section, MAT provision is going to be applicable. Any person other than a company who has claimed deduction under any section other than section 80P includes in chapter 6A under heading C deduction in respect of certain incomes, or section 10AA or investment linked deduction section 35AD would be subject to AMT provision if his ATI exceeding 20 lakh rupees in certain case. The provision of AMT would, however, not be applicable to an individual HUF, AOP, BOI, whether incorporated or not, or artificial judicial person if the adjusted total income of such person does not exceed 20 lakh rupees. So in case of partnership firm LLP, that would be applicable always. But in case of individual HUF, AOP, BOI, AJP, for those that slab rate person, it would be applicable only if your adjusted total income exceeding 20 lakh rupees. What is adjusted total income? How we need to calculate it? We have the summary for each and everything. Individual HUF, AOP, BOI, AJP paying tax under default tax regime under section 115 BAC are also not liable to alternate minimum tax. So if you are going to pay tax as per section 115 BAC, then AMT provisions would not be there. How to calculate ATI? I have made a summary and the details are after this. So AMT will be applicable as follows. Find out regular income tax liability as per normal provision of the income tax. That means as under optional tax scheme. Because if it's a default tax regime, AMT not applicable. So first of all, you have to calculate your normal income tax liability and your normal total income under optional tax regime. Clear? Then find out ATI of the non-corporate assessee. ATI need to be calculated as follows. Total income as per Income Tax Act under optional tax regime. We need to take the TI, not the PGBP income. We have to take the TI from optional tax regime. Clear? That needs to be taken. Then a specific deduction need to be added back. The deduction is specified at 80 QQB, 80 JJAA, 80 RRB. So what is section 80 QQB? What is the deduction under section 80 QQB? Who will tell me? So I'm not asking how much. I just need to know, Artik, for which purpose, the applicability of section 80 QQB. That is for if you are an author of a book, correct, other than textbook. Clear? So that is like Harry Potter book writer, they can claim, the comics writer, they can claim the reduction of section 80 QQB. Correct. What is section 80 JJAA? What is section 80 JJAA? The applicability of section 80 JJAA is for which purpose? What is the main highlight of that? Additional employee, correct. Eligible additional employee need to be there. So if you are having appointed some eligible employee as per section 80 JJAA, then additional 30% of the additional employee payment could be claimed as deduction. And 80 RRB is for, Nitin is already sent the answer, royalties on patent. Very well done. So if these deduction has been claimed, look, we are taking the total income. Clear? That means after deduction. So if in that total income we have claimed deduction of section 80 QQB, JJAA or 80 RRB, then we need to add back those deduction. Only these three deduction need to be added back. If you have claimed section 10 AA, of course need to be added back. And if you claim section 35 AD, then again you have to add it back. If you are adding back section 35 AD, then you will claim depreciation at least. Suppose the building value was 10 crore. You have claimed 10 crore deduction of section 35 AD. So 10 crore need to be added back, but you can claim depreciation in that case because you have to match your profit with your accounting provision. So accounting can claim the depreciation. So you will add back 10 crore, but you can claim the depreciation on that. Suppose it's 10%. So we will add back 10 crore and deduct 1 crore rupees for depreciation. So net effect would be 9 crore. So after adding this, we should ignore depreciation. No, we have to consider depreciation. Depreciation need to be reduced. That means we are considering depreciation. 35 AD we need to add back, but depreciation on that 35 AD asset, what we have added back, need to be reduced. Clear? These three things need to be added back. Then this is be called ATI. So if that is exceeding 20 lakh rupees in case of individual HUF, AOP, BOI, AJP, then AMT provision would be applicable. Suppose this is 18 lakh in case of individual, then no AMT tax need to be calculated. The normal tax which has been calculated as per optional tax regime would be my final tax liability. Need to be compared with section 115 BAC tax. Lower would be final tax liability. So if it is exceeding 20 lakh rupees, then only you have to calculate AMT in this case. The rate is fixed for each and every person. That is 18.5%. Surcharge as per the surcharge provision. Like up to 50 lakh, no surcharge, more than 50 lakh, up to 1 crore, 10%, and so on and so on. Cess would be 4%. Now step 4 would be my tax liability and total income. So the step number 1, which says calculation of total income and tax as per optional tax regime, that tax and the tax as we have calculated as per step number 3. Higher would be your tax liability and respective income will be your total income. So that has been explained earlier in this session, that how we need to calculate tax most beneficial to the assessee. Tax as per AMT, tax as per normal provision, whichever is higher. Clear? Excess paid tax can claim as AMT credit in 15 years. Same as per provision of MAT. Clear? Credit can claim in the year in which normal tax exceed the AMT. So you can claim the credit of AMT only in that year in which your normal tax exceed the AMT. Credit of how much amount you can claim? Normal tax minus AMT. In the particular year, if normal tax higher than AMT, then the difference only can be claimed as a AMT credit. Tax credit not allowed if adjusted total income does not exceed 20 lakh in the year of set off. So if the AMT is not applicable, then there could not be any tax credit applicability. A person who is paying tax under the default tax regime under section 115 BAC would not be eligible to claim AMT credit also. This is the summary for your understanding. For solving a question, that is very important. You can solve the question on the basis of these provision, and detail has been specifically given over here. So you can go through with the detail part also. Accordingly, where the regular income. So generally what happened, there are provision and then I make summary. But only for this section, I have prepared summary before the provision. So first of all, you should go with the summary. So when you will read the provision, you will understand each and every word of that detailed provision. So kindly go through with these provision. If there would be any problem, definitely I am going to solve it for you in the next session. Now point number 13, examine whether to pay tax under default tax regime or under normal tax regime. That point we have already discussed in earlier of this session, in which I have told you that first of all we have to calculate tax as per section 115 BAC. Then we have to calculate tax as per optional tax regime, and we have to calculate tax as per AMT if applicable. Higher of optional tax regime tax and AMT tax need to be taken to compare with 115 BAC tax, and whichever is lower is going to be your final tax liability, and the respective income will be called your total income. Clear? But now the section explain one more thing. Can we change section 115 BAC every year? Is it possible for an assessee that this year I want to pay tax as per default tax regime, and the next year I want to pay tax as per optional tax regime, and again in the next year I want to again pay tax as per default tax regime? So either this change of option is allowed or not allowed, that we are going to discuss in these provision. So the provision says if you are not having any business income, if there is no income under PGBP head, you can change your tax regime every year. There is no restriction. Suppose I am a salaried person, I do not have any business income, so I can pay tax as per default tax regime this year, next year optional, again default, again optional, again optional, again default. There is no restriction. So it says in case of individuals not having any business income, the total income and tax liability may be computed every year, both in accordance with section 115 BAC, regular provision, or AMT if applicable, or normal, or whatever is most beneficial. जो भी आपके लिए सबसे ज़्यादा beneficial हो, you can pay tax every year, whether in the same method or you can change the default tax regime into optional or vice versa. There is no restriction. Every year you can change that method depending upon which is more beneficial to you. In fact, such individual can choose whether or not to exercise the option of shifting out in each year. He may choose to pay tax under default tax regime in 1 year and exercise the option of shifting out of the default tax regime. But if you are having business income, now there is a problem. You will be only allowed once to opt out of your default tax regime, because initially everyone should need to pay tax as per default tax regime now. So if I'm a businessman, so automatically which regime is applicable on me? Default tax regime is applicable. But if I decided that this year I want to go out of this regime, I need to go into the optional tax regime, then you cannot again go to optional tax regime once again. So this option is valid only for once, that if you once shifting out of section 115 BAC, So this benefit you cannot take again in future. The provision says, in case of individuals having business or profession, the total income and tax liability may be computed both in accordance with default tax regime and regular provision of the act, including the AMT, in order to determine which is more beneficial. So you can do this. You can find out the most beneficial method, but every year changing is not allowable. Here are the provision for this. Such individual has an option to shift out of the default tax regime under this section, and the option has to be exercised on or before the due date is specified under section 139(1) for furnishing the return of income for such previous year. So if you want to opt out of this default tax regime, you have to exercise this option before filing of your return under section 139(1). The due date was 31st July or 31st October. So before these date, as the case applicable upon you, you have to decide whether you need to opt out of this regime or you need to be under default tax regime. And the provision says, and once such option is exercised, if you came out of the regime, it would apply to your subsequent assessment year. Then you have to pay tax after opting out, would be need to pay tax under optional tax regime for subsequent year also. Such person who exercise the above option of shifting out of the default regime for any previous year shall be able to withdraw such option only once. So suppose this year I was in default tax regime, but when I calculate my tax, I find it out it would be more beneficial if I will shift out of this regime. So I decided to pay tax under optional tax regime. And I pay tax as per optional tax regime. So now I have to pay tax only under optional tax regime for future year. But in future, I will get the opportunity once again to come back again into default tax regime. But once I came back under default tax regime, then I would not be able to go out of that default tax regime again. Then I have to be continued under default tax regime until otherwise my PGBP income would be gone. If I stop my business activity, then again I can go opt out and again come back into this. But you could only once exercise the option to opt out of the default tax regime. After that, you are allowed to come back once. But once you come back to the default tax regime, then you would not be allowed to go again out of that default tax regime. So shall be able to withdraw such option only once and pay tax under the default tax regime under section 15 BAC for a previous year other than the year in which it was so exercised. So suppose in first year, the Sasi was under default tax regime. In second year, he decided to go under optional tax regime. That is allowed. In third year, he was under optional tax regime. He need to be in same regime now. Under fourth year, he decided to come back under default tax regime. Now this is allowed. But now once he has come back, now if he wants to go under optional tax regime, now that is not allowed forever. Now he need to be under default tax regime for forever until otherwise he's stopped carrying on any business. So because if he stopped carrying on any business income, so he will fall under this category. In this category, it is allowed that you can switch into these category as many times as you want. So thereafter, such person shall never be eligible to exercise option under this section, except where such person cease to have any business income, in which case option under one above would be available. Okay. Credit for advance tax, TDS, TCS, we have already gone through with these provision. Now tax planning and tax saving. So I have told you that under this chapter, we are having two new topics. One was AMT and the second is tax planning or tax saving tips for salary income. Now let me tell you, this topic is not a compulsory topic. We can say this topic is not compulsory in every cases. So this topic is kind on objective base. On different kind of situation, this topic could be changed. So there is a procedure. In this topic, we are going to understand that how a structure of an employee need to be framed to minimize his tax liability. So for suppose if there is two employee are my client, and if I suggest for my one client that you should claim HRA in comparison to rent-free house. So that is not mandatory that for each employee, for my each client, this suggestion would be more beneficial. It will depend upon the salary structure, the allowances part, the basic salary amount, the exemption limits, the perquisites, etc. So how to make a specific structure for an employee to minimize his tax liability? That would be changed according to the case. So that would be different as case to case basis. So there is no specific rules under this topic that you have to follow always this method for defining a structure of salary. It will change according to the method, the amount of allowances on the basis of the salary package, on the basis of the perquisite, etc. So we have to see accordingly if we can suggest a specific kind of salary structure to an employee. So that would not be applicable for all kinds of employee. It will depend upon the specific information on case to case basis. What exactly we are going to discuss under this topic? Let me give you an overview with an example. Suppose there is a company XYZ Limited, and they offer a package of 20 lakh rupees to their employees. When we go for a job, there are two employees. One is Mr. A, one is Mr. B. The company is in Delhi. Mr. B reside in Delhi. And Mr. A suppose reside in Jaipur. So of course, he will come to join this company in Delhi. Mr. B reside in Delhi. He is already having his own house. So now, for the purpose of a job, when we join a job in any organization, so organization pay us salary, which consists of basic salary, and of course, other allowances to meet out your expenditure, which would be important for continuing this job. So organization provide you might be HRA for your house rent allowances, because you are going to join this company. Whether you stay in Delhi or in Jaipur does not matter, but they will provide you HRA or rent-free house as per their policy. They maybe provide you lunch allowance, or they could provide you lunch facility like canteen. There could be conveyance allowance. There could be transfer allowance. There could be transport allowance. There could be uniform allowance. There could be education facility. There could be children education allowance. There could be medical facility. So when you do a job, when you join a job, so there are multiple payments, which is for salary purpose. Whatever work you are doing, for that purpose, you are getting salary. There could be dearness allowance. There are multiple allowances and perquisites are giving to you. There could be helper allowance, there could be servant, there could be driver, etc., etc. So meet out the expenditure which is associated with that job also. If you are an employee, you are going to do a job. Of course, the other expenditure you have to met it out yourself. You have to take a rental house, or you need to buy a house. You need to having lunch, meal, conveyance, uniform, etc. So there are multiple expenditure which are associated with a job, and for that purpose, organization also provide you some perquisite or allowances. So for the purpose of working, they are provide you basic salary. This is for main working purpose. You are getting basic salary, but HRA, lunch, medical, hostel, etc. that is not actually for what you are working. That is for additional benefit what they are providing. Now, what we are discussing, which kind of salary structure is beneficial to an employee. So it is not feasible, or it's not practically possible that same kind of salary structure is applicable for all employees. If A and B are having choices that how they need to take this 20 lakh rupees, then how they need to design their salary structure, that is going to be discussed in this topic. Suppose if company decided that, okay, we will do one thing. Suppose in this case, Mr. A figure out that out of this 20 lakh, 4 lakh I need to spend on rent. That would be my rental expenditure if I am working in Delhi. 2 lakh rupees would be my conveyance allowance, my conveyance expenditure, sorry, not allowance. Fine. 2.5 lakh would be my lunch, etc. expenditure. So suppose if we decided that out of this 20 lakh, almost 8.5 lakh is going to be expenditure. So what I will have in my hand, almost 11.5 lakh rupees. Suppose this is the case, Mr. A figure out that out of this 20 lakh, it always happens when you go for a job in any organization, you decided that somebody is offering you 50,000 rupees. So you have to calculate that out of that 50,000, how much I'm going to expend. So suppose if you are in a city of Delhi and if you're in a city of Jaipur and you need to go for a job that is in Delhi and somebody is offering you 25,000 rupees. And in Jaipur only, suppose you are in a Jaipur, you have an offer in Delhi that they will pay you 40,000 rupees per month. You have a job offer also in Jaipur only. They are ready to pay you 20,000 rupees per month. Suppose the company is same, it's having a branch in Jaipur, it's having a head office in Delhi. So you must have calculated. We all need to calculate first that if I am going to do a job in Delhi, so my expenditure would be suppose 32,000, renting, conveyance, etc. Suppose, so I would save 8,000, and if I am working in Jaipur, my expenditure would be only for conveyance, etc. That would be only 5,000 because I have already my house in Jaipur, so I need not to pay any rent, etc. So my saving would be 15,000. So from the point of view of financial benefit, which is the best option? The option better would be 15,000, even if you are getting low salary in comparison to this. Other could be the factor, that is the big city or opportunities, etc. But on the basis of financial decision, if I need to tell someone that what is the best financial option for them, so I would suggest that this is the best option. You should not move on to the Delhi. You should stay there and you have to job here because you will get or you will able to save more rupees. Again, the same case, I cannot suggest a person who is living in Delhi only. So suppose a person is living in Delhi, for that person, this 40,000 rupees, suppose only 10,000 is going to be expenditure on conveyance, etc. So he will save 30,000. So that for that person, the better option would be this, not Jaipur, because for this case, if he move on to Jaipur and suppose he is getting the offer of 40,000 same from Jaipur also. But now suppose he need to expense 31,000 per month. So his saving was 9,000. So as per the circumstances, as per employees, we can say requirement, the option could be different. So there is no fixed answer. There is no fixed package. There is no fixed structure for deciding a salary structure. That could be different depending upon different situations. So in my case, as in this case of 20 lakh rupees, we have seen that Mr. A expenditure would be almost 8.5 lakh rupees. He has to pay 8.5 lakh rupees. So he would get only 11.5 lakh rupees in hand. So in this scenario, suppose what happened, if X Limited says we will pay you 20 lakh rupees as a basic salary, no other allowances, etc. So now what will happen? This whole amount is going to be taxable because there is no exempted perquisite, no exempted allowances. Only you can claim standard deduction. And suppose on a rough basis, we have decided the tax would be around 4 lakh rupees. So that is going to be deducted from his saving. So in hand, what he is gaining almost 7.5 lakh rupees. Because 20 lakh rupees completely given as a basic salary. So basic salary is going to be full taxable, and suppose the tax is 4 lakh rupees on this amount. So the remaining whatever left in his hand as a cash inflow would be 7.5 lakh. But suppose Mr. A went to a chartered accountant and ask that please structure my salary in a way so I can get more inflow and my tax liability could be lower. So what I will ask? I will ask Mr. A, okay, tell me how much expenditure you are expected to incur for continuing this job in Delhi. So he will tell me 4 lakh I have to pay for rent and 2 lakh for conveyance and 2.5 for lunch and etc. So I will ask him, go to your employer and ask him to structure his salary in this way, that out of this 20 lakh rupees, because 11.5 lakh you need as a cash inflow, other 8.5 lakh you have to expend. So 11.5 lakh would be your basic salary, and 8.5 lakh would be in the nature of allowances and perquisites. And for those allowances and perquisites, those are exempted or partially exempted under income tax. So I will ask him, okay, do one thing. If you want to pay 4 lakh rupees as a rental, then ask him that 4 lakh he need to pay as a HRA. So suppose if the employer pay HRA 4 lakh rupees, maybe we are able to get an exemption of 3 lakh rupees, suppose. So the 4 lakh rupees he received, but the taxable value would be only 1 lakh rupees. Suppose for conveyance, we ask the employer that kindly provide him the conveyance allowance of 2 lakh rupees for the journey. So suppose he received 2 lakh rupees, out of this 1.5 lakh he used for the purpose of official purpose. So only 50,000 would be taxable in this case. Out of the lunch allowance, etc., we are asking employer providing some facilities for which the exemptions under income tax is there. So suppose out of this 2.5 lakh rupees, we have provided some kind of perquisite, we have asked the employer to provide some kind of perquisite, so the taxability we can reduce. Suppose out of this 2.5 lakh, we able to make this 1.5 lakh taxable. So now I have received 20 lakh package in the same case, on which when I receive 20 lakh as a basic salary, I have to expend 8.5 lakh rupees by myself. And out of that, I have remaining with 11.5 lakh. I have to pay tax of 4 lakh and the remaining amount is 7.5 lakh. But if we structure our salary in this base, like now 11, you can see now 11.5, 12, 13, my taxable salary is almost 14.5 lakh. And the tax amount would be around 2.5 lakh, approximated. So now you can see I have in a higher cash inflow in this scenario. Again, in this case, I have received 11.5 lakh rupees as a cash salary. But out of that, 2.5 lakh rupees tax need to be paid, and I would have more cash inflow in this scenario. So this topic is not about what is the permanent structure for any employee. It would be changed according to the person. Now, if from the point of view of B, we see he will not ask for HRA because he cannot get the HRA exemption because he is owning a house in Delhi. So he will not be able to get the benefit of HRA. He will not able to pay the rent. So for this person, Mr. B, we would design a special structure, another salary structure, so that would benefit Mr. B to pay less tax or to pay less taxability in his case. So that will increase the cash inflow of Mr. B also. So I'm just trying to tell you that the topic what we are going to cover is not specific, is not fixed for every person. It would be changed, and you will see in the topic itself it has been given that you have to find it out those exemptions, those allowances, those perquisites which will reduce your tax liability and which could be different on the basis of case to case basis. So now we are going to discuss this topic, and this is pure theoretical topic. There is no fixed rule in this. It could be changed according to the case. So tax planning in respect of salary income. The definition of salary is very wide and include not only monetary salary, of course, we all know that. So you will be able to solve this topic if you know the salary provision, then you will be able to understand how we need to design that structure. There are solution, question, also illustration that we are going to discuss. But also benefit perquisite in kind under the default tax regime under section 115 BAC, the deduction is 75,000. In normal case, 50,000. Deduction for entertainment allowance only for government employee, deduction for professional tax. The following are some of the aspects can be considered for tax planning in regard to salary income. So this is not a numerical topic, or we can say this is composite topic. It could be theoretical and a little part of numerical also. An employer may plan the salary structure of employee, keeping in view the deduction, exemption available under that. So there is no fixed rule. If salary is paid as a consolidated amount without any breakup, the amount of salary after providing standard deduction of 50 or 75 would become taxable without any further exemption deduction. So it's better that you should divide the package into certain allowances and perquisites. Those are exempted under income tax, or those are partially exempted under income tax. So if that would be a choice, you have to follow it. Suppose there's an option to get the conveyance allowance of 2 lakh rupees, or there's a cap facility which is offered by the company to pick you from your residential house to the office, and of course to drop you again. Suppose the yearly expenditure is going to be 2 lakh rupees. So even if you take the allowance of conveyance allowance 2 lakh rupees, then it's going to be fully exhausted under those expenditures. So better to go for car facility. So if you take the car facility, there would not be any taxability in your hand. That would going to be 100% tax free. So therefore, the employer may structure the salary by including various allowances and perquisite in addition to basics, so as to enable the employee to optimize his tax liability. For example, the employer may include allowances as part of the salary structure of employee for which exemption can be claimed. Like for DA also, there are two kinds of dearness allowance, as per retirement terms and not as per retirement term. So if this allowance is as per retirement terms, that is beneficial for you to claim the higher exemption in case of calculation of HRA, because for the HRA, the salary includes only that DA which is as per according to term. You would be able to claim higher exemption in case of recognized provident fund, for gratuity, for leave encashment, etc. So that is also a thing which should be considered for design a salary structure. Can be claimed under rule number 2BB if the employee exercise the option to shift out of the default tax regime. Children's get the education allowance, hostel allowance, etc. So there is nothing new. They're just trying to explain you that you have to take those allowances, those perquisites which could be exempted. So the salary structure would be less taxable, and in that case, your inflow of tax would increase. Further, if employee exercise the option of shifting out of the default tax regime, the employer can give such allowances like special compensatory allowances, border area allowances, and by the end of the time, it will always remain with this. The employer has to make a careful study and fix the salary structure in such a manner that it will include allowances which are exempted. The same thing. Employees welfare scheme. So there is a contribution up to 12% is exempted, balance is going to be taxable. So better to contribute only 12% because excess is going to be taxable, or it shouldn't exceed 7,50,000 rupees that you must have gone through under salary topics. So you should not exceed those limit after which there could be taxability. You have to give benefit to employee up to those limit for which he can claim the exemption. Insurance policy like life insurance policy is a perquisite which is going to be taxable. But health insurance policy perquisite given to all employee is exempted. So life insurance is taxable. Any reimbursement by employer in respect of any medical premium paid by employee to keep in force insurance on his health or the health of member of his family under a scheme approved by central government for the purpose of section D is not a perquisite in the hands of employee. So better to take, if employer asks you, would you like to take reimbursement of life insurance policy from me or health insurance policy from me? So what you will choose? You will choose health insurance premium policy reimbursement because that is exempted. All these things are based on salary topic in a different way. Leave travel facility, rent pre-accommodation, etc. The employee should therefore work out his tax liability and net cash out. So this is the main object of this topic. This line is the main object, that you have to structure your salary package in a way that the tax liability would be lower and your net cash flow should be higher. We have solved example for this, so that would clear your doubt. Move on to our study material, test your knowledge questions. There is a question. There are two questions regarding illustration number 1 and illustration number 2. So Mr. A, age 32 year, is employed with XYZ Private Limited on a basic salary of 50,000 per month. He has received transport allowance of 15,000 per month and house rent allowance of 20,000 per month from the company for previous year 24-25. In my opinion, there would not be a question in an examination in which they will ask you to frame a structure of salary. That would be really complicated from, I guess, from your point of view. So they will provide you a question like this, and they might ask you which is more beneficial, like to take HRA or to take the rent-free house, etc. So these kind of combination might be given in examination to find out the best salary structure for an employee. So that would be a normal question for you. Like calculation of tax, there is nothing new for this. So he has paid a rent of 25,000 per month for an accommodation in Delhi. Mr. A has paid interest of 2,10,000 for housing loan taken for construction of his house in Mumbai. The construction of the house is completed in March 2025 and his parents live in that house. Other information: contribution to PPF 150, 80 CCD 50, medical insurance premium at the age of 65 of father 55, payment of medical insurance premium for self and spouse 32,000. So they are asking you just compute the total income and tax liability in the most beneficial manner. So when a question says most beneficial manner, so it's a normal question of total income and tax. Nothing is regarding the salary structure. It is a question of total income and tax based on majority of salary provision. We have to calculate tax as per section 115 BAC, and then we have to calculate tax as per optional tax regime. So basic salary is 6 lakh, transport allowance is 1,80,000, no deduction, no exemption. HRA is going to be full taxable because there is no exemption under default tax regime. Standard deduction would be 75,000. So last year it was 50,000, now it's 75,000. 9,45,000. Income from house property, because there is housing loan interest, which is not allowed in case of self-occupied property under income from house property under default tax regime. So no treatment, no reduction you can claim. So there would be total income 9,45,000. Tax would be as per slab rate 46,280. Now computation of total income and tax liability of Mr. So-and-so as per normal provision. So basic salary would be this. Transport allowance is this, and now you can claim the HRA exemption on the basis of HRA exemption section 1013A. We can HRA receive rent paid minus 10% of salary or 50% of salary. The lower would be allowed as exemption. So 2,40,000 will be completely exempted. Deduction would be 50,000. House property loss maximum 2 lakh you can claim. It would be set off. The TI would be 530. After other deduction, my tax liability would be 0. So now you can see which is more beneficial to an assessee. In this scenario, the of course optional tax regime is more beneficial because there would be no inflow of or no outflow of 46,280 tax liability. So on the basis of that, of course, the total tax liability for the benefit is for going for optional tax regime and not for default tax regime. Illustration 2 is there, which will explain you how to find out the cash inflow, etc. in this scenario. So now Mr. Kadam is entitled to a salary of 41,000 per month. He is given an option by his employer to take either house rent allowance or a rent-free accommodation as per your choice, which is owned by the company. The HRA amount payable was 7,000 per month. The rent for hired accommodation was 6,000 per month at New Delhi. Advise Mr. Kadam whether it would be beneficial for him to avail HRA or rent-free accommodation. Give your advice on the basis of net take-home cash benefit. This is new. Assume Mr. Kadam exercised the option to shift out of the default tax regime. Fine. So the basic intent of every individual, every person is whatever he is getting even after paying tax. The net cash inflow, if higher, that would be a good option. Whether tax pay higher, it does not matter. If the net inflow after paying tax is higher, that would be a good case. So we have to compare those options, HRA option, and the other is rent-free house option. Salary would be same. Perquisite value of rent-free accommodation. If you'll take rent-free accommodation, the perk would be 10% of salary. And of course, rent-free house case, this would be not applicable. If we go for allowance, that is 7,000 per month for 12 months. So that would be 84,000 HRA. If we find out the exemption, the taxability would be 61,200. So this case, the taxability was 49,200. But if you'll go for HRA, the taxability would be 61,200. But the story did not end yet because we would have deduction, etc. After that, we would be able to understand which is more beneficial. And we have to see under the both option. Again, the question says Mr. Kadam exercised the option to shift out of the default tax regime. So we have to calculate tax under only optional tax regime. Reduction would be same, 50,000, 50,000. Salary is 503,491,200. Total income would be 5,03,200, 491,200, because rebate would not be applicable in this case because income exceeding 5 lakh. So there would be tax liability of 13,670, and there would not be any tax liability under the option in which he go for rent-free house. Now this is, you have to check what is the better choice on the basis of cash flow statement. Now, if you will see, he will receive cash salary 576, like basic salary plus HRA also. So he will receive allowances after increasing the monetary salary in his hand would be 5,76,000. While in this case, he's only receiving basic salary 4,92,000 because rent-free house is a perquisite. Then we have to pay rent also, that is 72,000 rupees. So that is a cash outflow. In this case, there would be no outflow. Tax on total income need to pay by him is 13,000. So after this, the net inflow is 493.30. And in this case, that would be 4,92,000. So which is better on the basis of net inflow? This would be the better case. So in this case, you need not to pay tax, but you are not receiving HRA. Suppose in this case, everything else would be same. HRA exemption would be same. Suppose this is only 65,000. Rent paid is 65,000. Then 7,000 would be increment. That would be 4,97,330. Suppose exemption of HRA would remain same, and this outflow of rent was suppose 65,000. So now you can see even after paying tax, this would be the better option in comparison to this in which there was no payment of tax. So it would not be always that paying tax. If you are paying tax, that means your inflow would be reduced. No, even after paying tax, it might be possible that your inflow could be higher than from that option in which you are not paying tax. So because the rent outflow is 72,000, suppose it is just 65,000. Then even after paying tax, you would be in a better position under option number 1. I hope you can understand all these process. So now we have left with test your knowledge, 12 question of test your knowledge. Of course, one by one, I will solve it for all of you in the separate sheet. In the next session, we are going to solve all test your knowledge question, and you have to revise the surcharge provision, the rates of tax provision, the PGBP provision, the agricultural integration provision, marginal relief also. The first question relates to the marginal relief only. So that would be a homework for you. If you have any query, you can ask me. Arthik is saying, sir, partnership from 20 lakh limit for ATI is not applicable. Yes, for the purpose of partnership, LLP, etc., there is no ATI limit applicable. Always AMT need to be applicable. This chapter is not available in English. Can you upload your notes PDF on portal? Okay, fine. I will upload my notes, and I have the study material. I am also going to upload that for all of you. Do not worry. Previous question solved by you or no? What does that mean, Tambeshwari? Previous question solved by you or no? I do not get what exactly you want to say. Even if you have any other issue, please ask me. Concessional rent of 72,000, why not deducted in statement? But concessional not paid. That's a perquisite. So why we need to pay it? We do not need to pay anything. Tambeshwari, previous year was assessment year 24-25. So those questions going to be taken in the revisionary batch. So I believe that in all cases, we are also conducting, BUS also is conducting revisionary classes. So examination would be in May, might be in February or March. There would be revisionary classes. In those classes, we take the MTP question, RTP question, and previous year question, not in these sessions. So if the Kasak is asking, assessee does not have claimed any of the applicable deduction for AMT, then AMT will still apply on total income at 18.5% or not. If you did not claim any deduction, and if there is ATI, which is exceeding 20 lakh, the rate would be 18.5%. That is what I am trying to understand from your question. If assessee does not have claim any of the applicable deduction for AMT, we have to calculate the AMT, whether their deduction 10AA, 35AD or not. And if it exceeds 20 lakh rupees, the rate would be 18.5%. Tax rate for partnership is 30%. Yes. So do not have May. I will upload, of course, you can download. I will upload the study material from the institute site, and I will upload my notes also. So you can download that from the portal. Abhishek Mishra is saying planning of salary must be done in the beginning of financial year, as employee has to declare regime as per the provision of TD. That would be depend upon the employer-employee policies. If they'll ask you to upload it in the initial of the beginning of the financial year, you have to do the planning at that time. Nadga Gopal is saying story. Okay, किसी और को story सुननी है? बस एक ही बच्चे को सुननी है? Anybody else interested in story? ओके चलो, थोड़ी सी स्टोरी है, बहुत ही अच्छी सी, मतलब मुझे बहुत पसंद आई ये वाली स्टोरी। मैंने हर्ड इट अभी 4-5 दिन पहले मैंने पढ़ा, और स्टोरी की कमाल की बात यह है कि आपको सब पता है इसमें पहले कि मैं क्या बोलने वाला हूँ और क्या होने वाला है, फिर भी एंड उस तरह से ड्राफ्ट किया है राइटर ने कि एंड सुनने के बाद आपको अच्छा सा लगता है, वो बड़ी इंटरेस्टिंग सी है। अच्छा, क्या था, एक इंजीनियर था, वो एक गवर्नमेंट ऑफिस में काम करते थे और एक क्लर्क थे वो, और बहुत ज्यादा सैलरी नहीं थी उनकी। तो एक दिन वो घर से अपने ऑफिस के लिए जाने वाले थे और भगवान को बहुत मानते थे, तो पूजा करने के बाद वो जब ऑफिस के लिए जा रहे थे तो उनकी वाइफ ने उनको बोला कि हमारे घर का रेफ्रिजरेटर खराब हो गया है और नया लेना पड़ेगा, बहुत बहुत खराब हो गया। तो उन्होंने एस्टिमेट लगाया कि लगभग 10,000 का आएगा न्यू रेफ्रिजरेटर, बट सैलरी खत्म हो चुकी थी, मंथ एंड था, तो उन्होंने कहा कि अभी थोड़े दिन कोशिश करो। तो उसकी वाइफ ने बोला कि नो, इट्स वेरी डिफिकल्ट, हो नहीं पाएगा, रेफ्रिजरेटर इज एसेंशियल, बिकॉज गर्मियां चल रही थी, समर सीजन वॉज देयर। उन्होंने कहा चलो देखते हैं। तो उनकी वाइफ ने कहा तो भगवान से प्रे करो ना, सुबह से शाम आप भगवान से प्रे करते हो तो वो आपको दिलवाएंगे 10,000 रुपये आज कहीं से। तो वो स्माइल करके अपने ऑफिस चले गए, और जब ऑफिस पहुंचे तो एक कॉन्ट्रैक्टर आया हुआ था उनके ऑफिस, जिसको अपना कोई टेंडर पास कराना था गलत तरीके से, अनऑथराइज मीन्स। तो उस कॉन्ट्रैक्टर ने उन्हें ऑफर दिया कि आप मेरा ये टेंडर पास कर दीजिए और मैं आपको 10,000 रुपये रिश्वत दे देता हूँ। जब उन्होंने सुना तो उन्होंने अपनी वाइफ को कॉल किया, उन्होंने कहा अरे अभी एक टेंडर के लिए कोई आया है और वो मुझे 10,000 रुपीज की ब्राइब दे रहा है। तो उनकी वाइफ ने कहा अरे भगवान से आपने सुबह मांगा था पैसे रेफ्रिजरेटर के लिए, देखो भगवान ने भिजवा दिए। उन्होंने भी सोचा कि हाँ बात तो ठीक है, मैंने भगवान से बोला था पैसे चाहिए और वो अब मुझे पैसे दे रहा है, पैसे को तो मना नहीं करना चाहिए। तो वाइफ ने कहा ले लो, पैसे मिल रहे हैं तो आप ले लीजिए, और फिर ये पैसे तो भगवान ने भिजवाए, आपको आपने मांगा था। वो वापस गए, उन्होंने सोचा काफी, बट उन्होंने सोचा कि अगर भगवान को ही दिलवाने थे तो भगवान गलत रास्ते से क्यों पैसे भिजवाते। अगर गॉड ये करना चाहते मेरे लिए तो वो सही रास्ता कोई निकालते पैसे देने का, ये तो रॉन्ग मीन है। तो उन्होंने बहुत सोचा और फिर उसको मना कर दिया कि आई विल नॉट पास योर टेंडर बिकॉज ये गाइडलाइंस के अकॉर्डिंग नहीं। ऑफ कोर्स उन्होंने पैसे नहीं लिए। घर वापस आए तो उनकी वाइफ ने उनको बोला कि यार पैसे, तो उन्होंने कहा मैंने नहीं लिए बिकॉज मुझे लगा कि अगर भगवान को ही देने हैं तो ऑफ कोर्स वो वाया करेक्ट रूट आने चाहिए, ये तो गलत रूट। वाइफ ने बहुत सुनाया उनको, एज यूजुअल चले गए। फिर किसी ऑफिस के काम से कहीं बाहर गए थे, लौट कर आ रहे थे ट्रेन से। उस ट्रेन में उनको एक बिजनेसमैन मिला जो ज्वेलर थे और उनका बेटा भी था साथ में। उनकी आपस में बात हुई, उन्होंने बताया हमारी ज्वेलरी की शॉप उसी शहर में है जहां आप इंजीनियर रहते थे, बाकी और कोई बात नहीं हुई। ट्रेन से उनका स्टॉपेज आया, वो जो बिजनेसमैन थे वो उतर गए, बट एक बैग छोड़ के चले गए। गलती से बैग वहां रह गया। इंजीनियर ने वो बैग उठाया, चेक किया तो उसमें बहुत सारे पैसे थे और ज्वेलरी थी, बहुत सारे प्रेशियस स्टोन थे। बट वो तो ईमानदार इंजीनियर था, उन्होंने वो बैग लिया। तब तक वो जा चुके थे, फोन नंबर था नहीं, शॉप पता थी उन्हें कहाँ थी, उन्होंने बताया था ज्वेलर ने, तो उन्होंने कहा कल जाके वापस कर दो। घर पहुंचे इंजीनियर, बैग खोल के फिर चेक किया तो बहुत सारे पैसे थे। बट वो तो ईमानदार थे। सो नेक्स्ट डे वो सुबह ऑफिस जाने से पहले उस ज्वेलर के यहाँ पहुंचे, उसे बैग दिया। और आपको ज्वेलर बहुत परेशान था, बहुत दुखी थे सब उसके यहाँ पर, बिकॉज बहुत सारा पैसा और ज्वेलरी थी। उसने बैग देखा तो बहुत खुश हुआ, सब कुछ चेक किया, चेक करके बहुत थैंक यू बोला उनको, इंजीनियर साहब को। और फिर जब इंजीनियर साहब जाने लगे तो उस ज्वेलर ने एक एनवलप दिया उन्हें, उसमें कुछ पैसे थे और उन्होंने कहा प्लीज सर ये आप रख लो, प्लीज मना मत कीजिए। तो इंजीनियर ने पैसे रखे और उसको बोला ज्वेलर को 10,000 रुपए है ना इसमें, 10,000। ज्वेलर ने कहा आपको कैसे पता। तो इंजीनियर ने जो ऊपर गॉड की वहां पर एक स्टैचू रखा था उसको देखा, स्माइल किया और बोले मुझे पता था, और चले गए। सो दैट वाज द मोरल स्टोरी कि लाइफ में गॉड आपकी हेल्प करेंगे या नहीं करेंगे, बट आपको अपना राइट वे चूज करना है। मतलब आपको पढ़ना है ही, कभी भी लाइफ में कोई काम करना है तो आप अपने जो राइट पाथ है उस पर कीजिए। गॉड को अगर हेल्प करनी होगी तो वो राइट वे से ही करेंगे, रॉन्ग वे से करने की कोई जरूरत नहीं। तो जो आपका मोटिव है पढ़ाई को लेकर, अपने करियर को लेकर, अपने पर्सनल लाइफ में भी, ये बहुत इंटरेस्टिंग स्टोरी मुझे भी लगी पर्सनली। इट इज नॉट फॉर एजुकेशन, इट इज ऑल्सो फॉर टू बिकम अ गुड ह्यूमन बीइंग। अच्छे सीए तो बन ही जाएंगे, उससे पहले अच्छा इंसान बनना भी बड़ा जरूरी। तो अपना जो वर्क है, अपना जो हार्ड वर्क है, अपना जो भी आपको बेस्ट देना है वो आप देते रहो। उसके अलावा डेस्टिनी में, किस्मत में गॉड को हेल्प करनी होगी, लक आपके साथ होगा या नहीं, वो होगा जो भी होना है। यूनिवर्स विल वर्क अकॉर्डिंगली, बट यू हैव टू वर्क विद द बेस्ट व्हाट यू कैन डू। सो दैट वाज अ स्टोरी फॉर टुडे। कोई और क्वेरी है तो पूछ लो मुझसे, otherwise we will meet last time, day after tomorrow would be the last session for this examination or for this schedule. Okay, so I guess there is no more query, so can we close the session, Bhargav sir? Please close the session, sir. Thank you so much.